Good morning, everyone. Today we will start financial accounting. So I am Aryashmita Kar, lecturer in commerce, Kendrapada Autonomous College. So before we are starting the financial accounting, we have to understand what is the nature and what is the scope of accounting. So what is the nature of accounting? So accounting records, classifies, measures, interprets the financial transactions and communicate those transactions to internal and external stakeholders. So in the business, there are various type of events. In each day, many type of events are being undertaken. So all the events are not transactions, but all transactions are events. So out of those transactions, those which can be converted into monetary terms are known as monetary transactions. So those monetary transactions can only be recorded in financial accounting. So financial accounting records monetary transactions in books of accounts. Various books of accounts are there. We will discuss that later. So accounting is the art of recording. First part of accounting is recording, second part is classifying, then interpreting, measuring, analyzing and communicating the financial informations. So who is the person who has created this concept? If the question will arise, then we will see Luca Paciello is the father of accounting who had started this in the year of 1949. So accounting is not only required in business units. That means we cannot say that it is recorded in business units. It is recorded in non-business units like school, colleges, hospitals, where the income and expenditure record is required to be maintained. Then in the second thing, we have to study about what are the objectives of accounting. So when we are saying the objectives of accounting, the first and foremost thing which is coming to our mind is recording the financial transactions. So first thing for which the accounting is created is to record the transaction in the books of accounts. So what is the books of accounts? So books of accounts means first book of account is known as journal, where the monetary transactions are recorded in a chronological order. So here another question arises, what is the meaning of the chronological order? So chronology means the date wise, the time wise, when the transaction has happened, it is recorded in the books of journal. So after recording all the transactions in journal, the next step is to post all the transactions in the books of accounts, that is known as ledger. So after journal, the business unit is posting all the transactions in ledger. So after preparation of ledger, to verify what is the accuracy of the ledger account, trial balance is prepared. Trial balance is prepared by taking into consideration the debit total and the credit total and to find out whether it is accurate or not. So after preparation of trial balance, the next step is to prepare the financial statements that involves profit and loss account and balance sheet. So profit and loss account is known as income statement and balance sheet is known as positional statement. So balance sheet shows What is the position of the business on a particular date? Whether the organization is sound or the organization is sick. So these things are confined into the objectives of accounting. Third, the last thing is, after preparation of financial statements, after preparation of PL account and balance sheet, there are some information that what is the worth of the organization. The organization is having or incurring losses or earning profits. So that information must be communicated to various stakeholders. So stakeholders means some are the internal stakeholders, some are the external stakeholders. So we will discuss about that in the next slide. So now when we are reading about financial accounting, we have to read about the three terms, that those three terms are the most basic terms. So we have to know about those three basic terms. So one is bookkeeping, second one is accounting, and third one is accountancy. So bookkeeping is the narrow concept and accountancy is the broader concept. So bookkeeping means keeping the books, keeping the records. So keeping all the transactions in a recorded form is known as bookkeeping. That we have read before, accounting records the financial transactions. That means accounting, the primary form of accounting is bookkeeping. So after bookkeeping, the next step is accounting. So accounting is the art. It is the art of recording, classifying, interpreting, summarizing, and communicating the financial informations. Then the most important term, that is the broader term, what comes, that is known as accountancy. So accountancy means it is a profession. It is regulated by a autonomous body. In India, it is regulated by ICAI, so Indian Institute of Chartered Accountants, so which makes the rules and regulations of various accounting practices. It makes the rules and regulations, and by taking into consideration those rules and regulation, the accounting system is carried out in every type of business organization by taking into consideration its nature, whether it is a profit making organization or it is a non-profit making organization. So in profit making organization, we are preparing the PL account. In non-profit making organization, we are preparing the receipt and payment account, but the concept is the same. The concept is to record all the business transactions to verify whether the organization is heading towards the profit or the organization is suffering with the loss. Then coming to the next slide, we can say accounting is an information system. If I will say accounting is a language of business, then it is absolutely correct. So accounting is a language of business. What is the meaning of that? So the language we are saying, so now I am saying the language that is known as English. So through English, I am communicating between you and me. So accounting communicates the business informations. So that accounting is known as the language of business. So as we know, business is an artificial person. Business cannot speak by himself. So business is speaking through the books of accounts, and the books of accounts, the art of recording the books of accounts is known as accounting. So business informations are communicated to various stakeholders. Then who are the stakeholders? Stakeholders means those who have interest in the business, whether they are internal business or internally they are connected or externally they are connected. So who are the internal stakeholders? Owners, managers, employees, they are internal stakeholders. So who are the external stakeholders? So external stakeholders are the investors, creditors, government, consumers, tax authorities. So they are the external consumers. So if we will summarize what is the art of accounting, then we can better understand through this diagram. First, there is monetary transaction. Second, those monetary transactions are recorded, classified, summarized, analyzed, and interpreted. And finally, those information is communicated to various stakeholders, that is known as internal stakeholders and external stakeholders. So next we will come to the branches of accounting. So when we are talking about accounting, so it is evolved throughout the period. So first it is financial accounting. Due to certain disadvantages of financial accounting, another type of accounting which is evolved, that is known as cost accounting. Then due to certain disadvantages of cost accounting, another type of accounting which is emerged in the year of 1950, that is known as management accounting. So financial accounting, as we read, as we discussed before, so it is the art of recording the financial transaction in the books of accounts to find out whether the organization is earning profit or incurring losses. So it is the whole aim of financial accounting. And financial accounting records all the data in a whole form. Financial accounting never segregates each department, and financial accounting never records the non-monetary transaction, which is very important for an organization. Due to this type of disadvantages, cost accounting has been emerged. So cost accounting, it records monetary as well as non-monetary transactions, and cost accounting defines what is the cost of each unit, each cost center, and each product, so that it is easy to find out what is the selling price. And when the cost price and selling price is known, the organization can easily put the profitable factor into the selling price. So cost accounting is helpful in those aspects where the financial accounting is lacking. After that, when the refined form of accounting came, the need of management accounting is felt. So what is the need of management accounting? The That means in management we have read there is three labels. One is top level, one is middle level, and another one is lower level. So the decisions, the policies are taken by the top level, which is implemented by the lower level authorities. So when the top level authorities are taking the decisions, from where they will take the decision? So they will take the decision from the past data. So they need financial accounting data and cost accounting data to take a policy, to take a decision about a policy. So when they are needing this, the concept of management accounting is evolved. So as per the management accounting, the purpose is to assist and evaluate what is the impact of various decisions upon the various departments in the process of profit making. So we can say the three branches of accounting are interdependent. So in the next slide, we will discuss about what are the basis of accounting. So basis of accounting means how many bases are there. That means what is the base? When we are recording the transaction, what is the base? If there is a cash base or it is a accrual base. So if it is a cash basis accounting, so cash basis means it is a system where the transactions are recorded when the money is received in cash. So money is received in cash and it is recorded in the books of accounts. In case of accrual basis, whether the money has received or not, that is not important. The important is the transaction has effected. The goods sold. The goods sold is a accrual basis of accounting. but goods sold and the money received, and when the money received it is recorded in the books of accounts, that is known as cash basis of accounting. So accrual basis of accounting is more broader than the cash basis of accounting because it is flexible. It is flexible and it is required for the business organization for its smooth conduction. Then in the next slide, we will study about functions of accounting. So functions of accounting, I have already told. So I have already discussed about the various functions of accounting. Again, I am saying, so if there is a question, what are the functions of accounting? Then we will start from recording, classifying, summarizing, analyzing, interpreting, and communicating the financial informations. The first thing is recording. So recording means recording the transaction in a form of original books, primary books, trial balance, and the financial statements. So first and foremost thing is to record the transactions in journal. Then after recording, it is being classified into different heads, and by putting the different heads, the ledger account is prepared. So after preparing the ledger account, it is summarized. It is summarized and the total of debit balance of ledger and total of credit balance of ledger is taken to prepare the trial balance. So when the trial balance is prepared, the value of the trial balance, the amount which is recorded in the trial balance is required to prepare the balance sheet. So when we are preparing the balance sheet, so balance sheet records the assets and liabilities amount. So after preparing the balance sheet, cash flow statements is required, fund flow statement is required to open. So after preparing all the financial statements, it is communicated to the shareholders. So it is communicated to the shareholders as information so that they can take the future decision whether they are interested in the particular business or they will leave the business. So the whole profitability, the whole goodwill, the whole net worth of the organization depends upon how the organization is recording its business transaction, how functional is the accounting system of the organization. If the accounting system of the organization is very functional, then it can record all those transactions, it can prepare its financial statements in a timely manner so that the investors will not leave the organization, the investor base of the organization will be much broader. So we have already discussed this. What is the accounting cycle? So the accounting cycle first starts with the ledger, first starts with the journal. Before that, before the journal, there are the transactions. So transactions, journal, ledger, trial balance, PL account, and balance sheet. So this is the accounting cycle of each and every business and non-business organizations. Then the next thing which is coming, that is what is the meaning of an account? That means we are saying that we are posting all the transactions in ledger. So when we are posting all the transactions in ledger, how we are posting, how we are recording? So we are recording through an account. So what is the meaning of account? So account means it is basically a English alphabet T form. So in English alphabet T form, there is two sides. One is debit side, another one is credit side. So debit side is known as DR dot and credit side is written as CR dot. So we are recording all the debit balance in debit side and credit balance in the credit side. Then when we are recording all the transactions in one account, so account must be various types. And as per the type of account, by evaluating what is the nature of the transaction, we are putting those accounts in a particular ledger. Then when we are differentiating those accounts, it is of three types. One is personal account, another one is real account, and another one is nominal account. So personal account means it records all the transactions of a person. So person may be an artificial person may be a representative person. So artificial person means, that means Ram, Gopal, Hari, bank, any type of name is known as artificial personal account. What is representative personal account? So representative personal account is representing someone. Outstanding expenses. Outstanding expenses means, that means the expenses which has incurred but not paid, that is known as outstanding. Accrued expenses, accrued incomes. So these things are done under a head. It is done for a person. Outstanding expenses of Rama, outstanding expenses of Sam. So those are known as the personal accounts, and we can name them as representative personal account. So then comes to real account. So real account means any type of asset, properties are known as the real accounts. That means cash, gold, building, plant, machinery. So all are known as the real accounts. Then comes to the nominal account. That means we have read three type of account. One is personal account, another one is real account, and another one is nominal account. So personal account defines a person, whether the person is an artificial person or representative person. Second one is the real account, which defines all the property of the organization. And third thing is the nominal account. So nominal account means all the expenses, losses, incomes, and gains. That means in the organization throughout the period, what are the expenses and what are the revenues? These are taken into one form of account, that is known as your nominal account. And when we are talking about